Digital financial services company SoFi is in focus this morning, and it's fair to say that the analyst community is still fairly split over this business. It's been a good year for shares, but the bear case for many has been based on the idea that the stock is overvalued. This morning, we'll go some way to dispelling those concerns. Shares rocketing after a strong earnings report, boosted by the resumption of student loan repayments. Volume for the quarter blew past expectations to pass $900 million. And the company also lifted its full-year guidance for the year. Joining us now to break it all down, we've got Dominick Gabriele, who is the Oppenheimer Executive Director of Fintech and Specialty Research here. Dominick, great to have you here with us this morning. You think about the reaction that shares are seeing and what ultimately SoFi had to say in this earnings. Why do you believe that we're seeing the reaction that we are here in Wall Street?
Sure, and thank you so much for having me. I think part of what you're seeing, the outperformance and the stock being up today, is revenue growth was a little bit better, about 15 million better than our expectation. And you've also got a lot of that, about 12 million of it, of that beat falling to the bottom line in adjusted EBITDA. And so look, the adjusted EBITDA incremental margins are significantly better than their 30% long-term guidance. They have about 48% incremental adjusted EBITDA expected this year margins. And so that's really, really strong. And so look, SoFi continues to have a really diversified business. The businesses are starting to chug along on multiple fronts in the financial segment and the tech segment. It's starting to come back towards some of the underlying growth rates we were expecting. And so there's a lot to like in the quarter for sure, as well as student loans being up. Originations being up over 100%. And that was actually much faster than we were expecting. We thought maybe in the fourth quarter, a lot of these loans would come back after the moratorium had ended. But that was a surprise to us for it to come so quickly already in the third quarter.
So then, Dominick, what do you think then the trend or that rate looks like in the current quarter? Because we know obviously it did benefit last quarter. When it comes to how big of a benefit of the resumption of student loan payments and the originations is going to be this quarter, what are your expectations there?
Look, I think we still have some really low comps where we were basically just, SoFi was effectively just originating private student loans, refinancings, and now we have the federal refinancings coming back. And so we expect, 130% growth. It's an astonishing number, but that just goes to show how much the moratorium really affected them and the demand for people to really term out these loans. They're not getting necessarily a significantly better rate given where rates have already risen from Fed actions. But a lot of people are extending the loan terms to lower those monthly payments, make them more affordable. That's what we're seeing.
All of these things considered, if there's one thing that you need to hear from SoFi execs about some of that long lead and some of the longer term expectations that even those who are continuing to watch this company like yourself have, and whether or not they're measuring up to and meeting some of those targets, what would it be? What is that core catalyst that really needs to be unlocked for this company?
I think continued profitability improvement and strong capital levels and a strong funding base. I think all these various factors really will affect the stock. And they started selling loans again, which is really important. This is originally an origination business. And so getting back to a good combination of origination and holding some loans on the balance sheet is really going to benefit this company in terms of how investors view the story, view the accounting, all those factors. But that continued 30% incremental adjusted EBITDA margin improvement, that's holding up and actually better this year. They're expecting that again next year, roughly 30%. So all these factors come into play, and we kind of like what we're seeing right now, especially after this quarter.
So you like what you're seeing right now was a solid quarter here from the company. We're seeing that reaction in the market today. When it comes to whether or not this momentum is going to stick, not only in this current quarter, but looking ahead to 2024, how do you see that playing out?
Yeah, it's a fantastic question. Look, I think that we're going to have a really great entry point at this stock. I always talk about a level below 750, even $6 being a really great entry point for this stock, given the valuation and what is expected the long-term valuation to be based on, whether it's book value, whether it's revenue growth. All these things really matter for the combined valuation of the company. And so I think we're going to have a really excellent buying opportunity in 2024, but I think the trends will probably slow down a little bit. SoFi, on the question I had on the call, I actually could see this business accelerating as others pull back, but SoFi is going to likely be pretty cautious as well and not try to take too much market share and ramping up revenue while others are pulling back. They have their own credit book, obviously, and the people that they sell to, the loans need to perform in a certain way. And so for the buyers to keep coming back. So it's really important that, SoFi takes a measured approach. We expect revenue growth to slow next year from this year, but still high 20s growth rate in revenue. And so, all these things put together, effectively what we're looking for is for a dip in the stock. And I think, the long-term trajectory is going to be on the right path.
This is also a company that's been talking about all ambitions all in one app and really trying to bring together kind of a financial services ecosystem or one-stop shop approach to its end users here. What components do you think they still need to add on that would really round out everything from student loans to financing on, other parts of your life to make sure that consumers are feeling that or at least gravitating towards that offering?
It's another really great question. They really do have quite a significant amount of products that consumers are going to be looking for. Now, one thing that they could dive into more, in a more meaningful way could be something along wealth management. They have some, wealth management products, stock trading, but, they just recently had 3 different IPOs that they allowed retail investors to join. That's a new thing. But overall wealth management, because remember, their base, unlike a lot of other, SPAC companies that came out in the last 2 years, this customer base is really high FICO score and likely pretty high income. And so wealth management in a more meaningful way, as a percentage of revenue within the financial services segment, that's a big opportunity. And that's somewhere they could go next.
Do you believe that this is a company, and I'm just kind of throwing this out there as we're thinking about how they would achieve that. Do you think that comes through a merger? Is that their best way to be able to do that? I'm thinking of one company in Robinhood who's, had a very volatile, publicly traded existence here for, one matter or another, where we've seen their market cap slip down to about $8 billion here. So ultimately, even though SoFi's is only at about, $7 billion, maybe a little north of that at this point. All that considered, does this come through a merger? Does this come through a combination with another business that offers those very modules or at least ambitions in terms of wealth management and trading and so forth?
I like the way you said modules there, because I think that SoFi is looking to grow organically first. I think that they believe they have a really strong member base that they can cross-sell at really discounted client acquisition costs. And so they really, really want to utilize that first. But at the same time, if technology is missing, if there's something that they can bolt on, I think that would make a lot of sense. I don't see a big transaction in the wealth management space or really any other product space for SoFi in the near future. That's my opinion, because I think that they're really focused on organic growth. And they're really getting these efficiencies in marketing spend to acquire new customers. And so I think that they're liking what they're seeing in their own productivity loop here, and they're going to keep utilizing it that way.